Welcome, everyone, to this deep dive. We're looking at Spotify Technology S.A. today, ticker SPOT.
Yeah.
We've gone through their latest Q1 2025 earnings, what analysts are saying, recent news, basically pulled it all together to get you the key insights.
Exactly. The mission here is simple. Give you a clear, pretty quick understanding of Spotify's finances right now, where they might be heading, and, what challenges they're facing.
Okay, let's jump right in then. Q1 2025 performance. Revenue came in at $4.2 billion. That's a solid 15% jump year over year.
Right, and their gross margin, 31.6%, actually nudged past their guidance. Plus, free cash flow was strong, $534 million.
Pretty good numbers.
Yeah.
But interestingly, the stock actually dropped a bit after the earnings came out. What was going on there?
Yeah, it seems the market was reacting mainly to the Q2 guidance, specifically around user growth. Even though Q1 premium subscriber growth was really strong, the forecast for overall monthly active user growth, the MAUs for Q2, well, it looked a bit slower sequentially. That likely spooked some investors.
Right. User growth is always such a key metric in streaming.
Definitely. Investors watch that number like a hawk.
So digging into that user growth a bit more, MAUs hit 678 million. That's up 10% year over year.
And premium subscribers reached 268 million. That's up 12%. And like you mentioned, their strongest Q1 for subscriber growth since 2020.
What's really driving that premium side?
A big piece of it is strong performance in emerging markets. Think Latin America, Asia Pacific. Spotify seems to be really getting traction there.
Interesting. So expanding that global reach.
Exactly. And management, despite that slightly softer Q2 MAU guide, they seem confident they'll still hit their full-year targets. They're expecting things to pick up in the second half.
Okay. Let's switch gears a bit and look at the revenue streams. Premium versus ads.
Sure. So premium revenue grew a healthy 16% year over year. That's driven by, well, more subscribers, obviously, but also a 4% increase in ARPU, average revenue per user.
And that ARPU bump is mostly from the price hikes they've been doing, right?
Largely, yes, those price adjustments are flowing through. On the ad-supported side, revenue was up 8%. That's coming from more music ad impressions, growth in podcasts, and their marketplace programs.
And importantly, the margins look better too.
Yeah, that's noteworthy. Both premium and ad-supported gross margins expanded significantly compared to last year. It suggests they're getting more efficient, maybe finding some pricing power.
Good sign. Okay, let's get a quick snapshot of the overall financials. Big numbers. Market cap floating around $130 billion.
Right. Revenue over the last 12 months, $16.23 billion. Net income for that period, $1.17 billion.
And looking forward, EPS around $9.41. What about their cash position versus debt?
Pretty solid balance sheet, actually. They have about $7.91 billion in cash and short-term investments. Total debt is $2.1 billion.
But there's one specific debt piece worth mentioning.
Yes, those $1.654 billion in exchangeable notes. They mature in March 2026 because that's, coming up relatively soon. They're now classified as a current liability on the balance sheet.
Okay, so something investors will be keeping an eye on how Spotify plans to handle that maturity.
Definitely.
Now, every company talks about its competitive edge, its moat. Spotify sees its own moat as, well, narrow.
What do they point to as their strengths?
They talk about having an industry-leading product, a strong value proposition for users, the whole freemium model that pulls people in and converts them.
Right, the free tier is key.
Yeah, high user engagement, gaining market share, and their unified ad tech stack. But they also acknowledge the constraints.
Like what?
Well, their reliance on content licensing gives a lot of power to music labels and rights holders. Competition is obviously intense, and frankly, achieving consistent profitability is still a relatively new thing for them, kind of early stages.
Got it. But despite calling the moat narrow, they still think they can grab more market share, maybe even benefit if competitors pull back.
That seems to be their view, yeah.
Yeah.
Especially in developed markets.
So what are the analysts saying about all this? Is there a consensus? Not really a strong one. Opinions are a bit mixed, which you can see in the recent ratings changes and price targets.
Okay.
The average target over the last 6 months or so is around $553.50, but there's a pretty wide range around that. We've seen some upgrades from firms like Evercore ISI and UBS, but also downgrades like from Redburn Partners. It really shows there's some debate about the stock's valuation in future.
Right, different perspectives.
Huh.
So looking ahead, what are Spotify's big plans? What's their outlook?
We're calling this the year of accelerated execution. The idea is faster feature rollouts, helped by better internal tools, and, of course, AI.
AI is everywhere.
It really is. They're expanding the video podcast program, pushing audiobooks more, and we've seen things like the AI playlist start rolling out.
And the big, audacious goal.
1 billion subscribers. That's the long-term vision.
Wow, okay. And for the next quarter, Q2 2025, what are they guiding for?
They're forecasting 689 million MAU, 273 million subscribers, revenue of 4.3 billion, keeping that gross margin around 31.5%, and operating income of 539 million.
Ambitious goals, but definitely not without risks, right?
Yeah.
What are the potential bumps in the road?
Well, the big one is always macroeconomic uncertainty. If the economy slows down, advertising spend could soften, which would hit their ad-supported revenue.
Makes sense.
Then there's the ongoing appeal in the MLC lawsuit, that mechanical licensing collective case. That adds a layer of potential financial uncertainty.
Right. Legal battles can be costly.
Absolutely. And we already mentioned the maturing exchangeable notes that need addressing. Plus, there's always that balancing act, investing heavily for future growth versus delivering consistent profitability now.
Okay, so let's try to wrap this up. What are the main takeaways for you from this deep dive into Spotify?
I think basically you see strong momentum in paying subscribers and definite improvement in profitability. Those margins are looking better. That's the good news.
Yeah.
But the near-term outlook for overall user growth gave investors pause. And they do have that debt maturity coming up. Analyst views are mixed, reflecting that it's, a complex picture right now.
So the big question really is, can Spotify's focus on innovation, on AI, on reaching that billion subscriber goal, can that overcome these headwinds? Can they really dominate the audio market?
And what impact will that maturing debt and maybe the outcome of that MLC lawsuit have on their path forward? Lots to watch.
Definitely something for you to think about. If you found this focused analysis helpful, please do subscribe to the channel and, importantly, hit that bell icon.
Yeah, your support really helps us keep bringing you these deep dives into business and finance. Thanks for tuning in.